Hey, what's up guys? Welcome back to Aimstone channel. Let's start this video with Bitcoin market. As of the time it's recording, BTC is trading at around $19,000. Yes, we're still consolidating sideways above the support line. However, Bitcoin failed to break above this resistance line. Now we are in this descending triangle or even in falling wedge, which is in most cases could be a bearish indicator. Here is other similarities that happened in this recent price action comparing to in June price action where BTC broke down to $20,000. Back then BTC was about $30,000 consolidating sideways once again. Then we had these two fake out, and in the second one BTC broke below 30k and then crashed below $20,000. Here's the question, why BTC crashed from $30,000 to $20,000? Well, the main reason BTC crashed because inflation numbers came up higher than expected for June, and that's the main reason why it happened. Now take a look what is happening right now. We also have these two fake out about $20,000, so we're back to $19,000 once again. And in just a few days, on Thursday 13, new CPI numbers will be released for September. So get ready, if the numbers will be way higher than expected, then we can witness another crash. However, on the flip side, if the numbers will be better than expected, then BTC has a good chance to rally. Now let's take a look at S&P 500. S&P 500 in fact is about to reach new annual low. That is correct, new annual low. Now S&P 500 is even lower where it was back in June. I guess good thing is for Bitcoin, BTC still above its June level. It actually quite surprised me how well BTC is holding up. Is BTC decoupling from the stock market already? Well, I think we should still wait and see what is going to happen. S&P 500 is trading right now below 3,600 points. Yes, it seems like there are more lows on the way. While Bitcoin and the stock market are continuing to crash, US dollar index continues to make one all-time high after another. As of the time it's recording, the US dollar index is around 112, and we're near a new all-time high. An all-time high was around 114, so it seems like if the stock market will continue to decline, the US dollar index will continue to strengthen. Let's take a look what is happening with treasuries. This is US government 2 years bond, which is 2 years treasury. Now the yield on the 2 years treasury is over 4.3%. That will be 15 years high. Yes, this is definitely not the worst investment in the world. Yes, maybe in real terms this is not a good investment. But what can you buy right now, especially that everything is crashing? Even gold as quote-unquote safe haven asset is down by a lot year to date. Now let's take a look at the 10-year treasury. 10-year treasury yielding slightly lower than 2 years treasury. Now it is at around 3.9%. So yes, if you're buying 2 years treasury, you will be better off than buying 10 years treasury. Well, why is that? As we can see, the spread between 10 years and 2 years is already flattened. In fact, it is already a negative. And usually when the yield curve inverts and goes negative, what it means is that we should anticipate a deep recession. In fact, as we can see, we're even lower below 0%. Is 0%, it means yield curve is flat, but now we are in negative territory. That's exactly what happened in late 1990s in dot-com bubble, and that's exactly what happened in 2007 prior to housing bubble crash. And now it seems like this is happening once again. As we can see, when the yield curves go negative, it's usually an indication that the market already topped. But when yield curves goes positive once again, this is when the real damage takes place. This is when recession and the big bear market takes place. In fact, in 2001 up to 2003, we had a 2 years decline in this bear market where S&P 500 lost 50%. In 2008 housing bubble, something similar played out. Yield curve inverted and it went into negative territory. But as soon as it started going up, the stock market starts to crash. That bear market lasted for almost 1.5 years. And once again, S&P 500 lost another 50%. Now the yield curve is once again in negative territory. But so far S&P 500 lost only 25%. So there is a good chance there could be another 25% to go if we compare it to these historic patterns. This week can get wild, especially at the end of the week, because as I said earlier, on Thursday we have new CPI numbers that will be released for September. And this is what Wall Street predicts. CPI year over year, they predicted 8.1%, and the previous month was 8.3%. 8.1%, I think it's a conservative number, especially the 30 days average price for the crude oil was down by 10%, which is a positive thing for inflation. However, let's take a look what they're predicting for core CPI numbers year over year. They are predicting 6.5%. What it means is that inflation is already entrenched. It's spread out from the bottom all the way to every sector in our economy. The previous month was 6.3%, and now we are forecasting 6.5%. Once again, those of you who do not know what core CPI means, core CPI is basically CPI numbers excluding energy. So yes, this is not a good look. Inflation is still very high, but what about our economy? What about our GDP? And here is what Atlanta Fed forecasts for the third quarter of GDP. Atlanta Fed forecasts 2.9% of Q3 in 2022. You would think, yes, this is very good thing. But let's not forget that good news is bad news and bad news is good news. What it means is that the labor market is still very strong and consumers continue to spend more and more money. Let's also not forget that our GDP is driven by at least 70% of consumer spending. To cool down the inflation, the central bank has to change the psychology of consumers. Consumers have to stop spending and they have to start saving. This is the only way high inflation can potentially go away. But you cannot expect inflation to go away if consumers spend more and more. Let's also not forget that the Q1 and Q2 GDP growth in 2022 were negative. In Q1, GDP came up at minus 1.6%, and in Q2, it was minus 0.6%. So technically, this is a definition of recession, but Congress failed to admit that we are indeed in the recession. Look, if they think we're not in the recession in 2022, just get ready for 2023. Here's actually a cool chart that shows Bitcoin market cap year-over-year change comparing to global M2 year-over-year change. As we can see, they are indeed quite correlated. When they print more and more money, Bitcoin goes up. But when they suck liquidity out of the market, Bitcoin goes down. And what are they doing right now? Especially Federal Reserve and Central Bank sucking liquidity out of the market. Well, not all central banks around the world are sucking liquidity out of the market. For example, Bank of England. Bank of England is doubling down of its quote-unquote temporarily QE. Bank of England set the upper limit of its daily gilt purchases of $10 billion per day, of which up to $5 billion will be allocated to conventional gilts and $5 billion to index-linked gilt. So yes, most of the banks are doing QT, but some banks like Bank of England are doing QE. But the biggest elephant is in the room is of course Federal Reserve. All investors around the world do not really give a shit about Bank of England. They pay close attention to what Jerome Powell and Federal Reserves are doing. Here is a cool on-chain analytic Bitcoin chart. This chart represents long-term investors' value map. As we can see, whenever BTC price hits to this yellow area, even the reddish area, this historically was a great time to buy Bitcoin. In fact, take a look what happened in 2015. Back then, BTC crashed to $200 and BTC price was in this red area. Now, let's take a look what is happening right now. As of right now, we are in this orange area. But in the next couple of months, there could be a good chance that we will be in this red area just like we were back in 2015. If that happened, there is a good chance that BTC could be around like $14,000, $15,000. So let's just see and wait what will happen. If you're a long-term hodler, you do not care what is going to happen in this recession in the next couple of months, then good for you. Then of course, you should pay close attention on the long term. As we can see, here is another chart that represents on-chain value map. and it actually forecasts $40,000 prior to the next Bitcoin halving that will take place in 2024. $40,000, it's a double from this current price, and it's 18 months from today. So if you think in 18 months BTC will be at $40,000 under 20k BTC buy, it's actually very great opportunity. Let's also not forget that what happened to Bitcoin after the Bitcoin halving. After the first Bitcoin halving, BTC made 100x. After the second Bitcoin halving, BTC made 33x. And after the third Bitcoin halving that took place in 2020, BTC made around 7x. So yes, the future of Bitcoin is very bright, but maybe the short-term outlook is not so much. Now, let's take a look at this quick video where this analyst explains why he remains very bullish on Bitcoin. Let's take a look.
Store of value, that's what you think its current main application is. Has it really been a great store of value? It seems so correlated to the NASDAQ.
Well, absolutely. It has been over the last 12 years. Obviously, there was a very high correlation during the hyper-liquidity area. We measured it at about 0.75 R squared to the NASDAQ during the 2-3 years where there was hyper-liquidity from the Fed. But even just the last 2 or 3 months, you can see that correlation go back down. It's down to 0.6. It was nothing to negative before the hyper-liquidity era. The fundamental drivers of Bitcoin have a lot to do with adoption, which is adoption of Bitcoin and crypto, as opposed to the fundamental drivers of the rest of the economy. So inherently, fundamental-wise, they should be uncorrelated.
You say trading is the second most important application. What does that mean? Just the trading back and forth of Bitcoin?
That's right. Trading is something.
What purpose, though? Just gains.
Well, that's right. Humans gamble on everything, and they bet on everything. And it happens that, including stocks, bonds, real estate, sports, etc. And it turns out that Bitcoin, it has the deepest liquidity. It has 24/7 trading. It's digital, so you can connect very sophisticated trading tools. And a lot of people have made money in it. Those are a lot of things that are attracting more adoption as people want to trade it and make money trading it. It's actually been one of the top applications and continues to be one of the top applications of Bitcoin. Bitcoin is a lot of things to a lot of people. You talked about it as a store of value, as a hedge against inflation. We also talk about the fact that it could potentially be all of money for some people. It could be a payment network, and it's a cultural phenomena for people that have a deep distrust of current institutions, government and corporate. So it can be a lot of things to a lot of people, and in fact it is.
When you take a look, though, at what is going on around the world, Gil, and sort of on what's going on with the stock market, you would think that this lays the groundwork for Bitcoin to reach, I wouldn't say new highs, but to be doing very well, better than it has been doing. And I'm wondering if there's sort of how come it hasn't done better in this environment? Exactly when there is, questions about the credibility of institutions like the central bank. There's questions about political stability around the world. There's questions about the stability of assets in the stock market. You would think that all these things lay the perfect groundwork for a bull case for Bitcoin.
Well, I would argue that the anticipation of institutions failing and the fact that institutions have been failing to some extent since the financial crisis is what got Bitcoin from 0 to 20,000. And if more institutions fail, or if more people believe that these institutions will fail, is happening in some places around the world, that will cause the next wave of adoption, at least in terms of retail and consumer adoption, for people that are failing and don't believe that institutions are failing and believe they'll fail more in the future.
Well, the main reason he remains bullish because he believes Bitcoin will be a great store of value over a long period of time. And of course, I agree with him, but maybe the short-term outlook is not that great, because we know that Bitcoin still remains very closely correlated to S&P 500, at least during the liquidity crisis. And we know that liquidity crisis could be just around the corner when S&P 500 is expected to go lower. Then there is a good possibility that BTC may drop even lower as well. Then, if it happens, this will be a generational buying opportunity. I will sell everything and I will just be continue stacking more and more sats. Let me know what you guys think about the future outlook for Bitcoin. Comment below, subscribe, and like this video.